If you're a SaaS company and selling in multiple states, there's a good chance that you've got a sales and use tax issue. I'm Bill Loew.
And I'm Monika Miles.
And we're Miles Consulting Group.
And in this video, we're going to show you how to deal with sales tax matters if you're a SaaS company. We've worked with hundreds of SaaS companies over the years, and we find that they tend to fall a little bit into a predictable pattern as far as their sales tax compliance goes. They all want to become compliant, but they find themselves out of compliance for a variety of reasons.
Many of our clients originate in California, and SaaS is not subject to sales tax in California. However, as SaaS companies expand and start selling into other states, sales tax applies to SaaS services throughout the country. As a matter of fact, there's about 20 states that subject SaaS to sales and use tax.
And it's some of the larger states. So Washington, New York, Pennsylvania, those are all states, Massachusetts, that tax the SaaS revenue stream. And many SaaS companies have clients in those states.
Most SaaS companies are become aware of this issue when they've crossed economic nexus thresholds in states throughout the country.
And then they want to get into compliance. And so that's when they usually say, hey, we need to get into compliance. How do we do that? The taxability of SaaS varies from state to state. So there's certain states that do tax it. There are certain states that don't tax it. There's some nuances where the state might not tax it, but some of the localities do. For instance, the state of Colorado is that way.
The rate may vary. For example, the state of Connecticut taxes at a reduced rate of 1%. The state of Texas taxes only 80% of the value of the transaction.
And more states are becoming SaaS taxable every year. So this year, another 2 states came into the fold of sales tax on SaaS.
While you may be going through this for the very first time, we've gone through this process many times with our clients, and we're here to help simplify and expedite the process for you. We follow a very standard process where we initially start with the categorization of your services. We have to understand which services are going to be taxable in a particular state, which are going to be exempt. For example, SaaS might be taxable, but maybe your implementation services or training services may be exempt. We have to make sure we have those revenues categorized by state.
And it's a streamlined process. So when I talk to clients, I tell them, I start with nexus. Where do you have nexus? Then are your goods and services, your goods and products and services taxable in that state? And then are there any exemptions? And we walk through that with the client for every state that they might be in, whether it's the SaaS service themselves or the underlying services, or both. And when I refer to SaaS, I mean the subscription service to the software itself versus the things like implementation services or training or any customization. There's also side benefits of engaging in that kind of an analysis and getting up to speed with your sales tax issues. Many SaaS companies are hoping to be acquired in a deal maybe several years down the road, and these kinds of issues are identified in a due diligence. So if the company can deal with it prior to getting to the M&A table, it's so much more beneficial.
Yeah, the other thing to always remember is sales tax is a pass-through tax. It's collected from customers, and when you choose or are unaware that you should be collecting it from customers, it ends up becoming a liability out of your pocket rather than being collected from customers.
Simply put, if you're a SaaS company, this is something you're going to have to deal with at one time or another, and you may as well deal with it sooner rather than later, and we can help.
If you're a SaaS company, it's likely you need help. We've helped hundreds of SaaS companies, and we'd like to help you. Please call us.